Jason Brady runs the top-ranked Thornburg Investment Income Builder and Strategic Income Funds. Welcome to Street Smart, Jason. Good to have you here on this Friday. And as you and I were just saying during the break, it's been a long week. It feels a little longer than some other weeks. But what do you make of the week we've seen and the month we've seen? Is this a rally that's going to last through the end of the year?
You know, it's a great question, and obviously, you know, stocks and bonds will go where they go on a day-to-day basis, and certainly they went heavily in one direction yesterday. But when I look at the reason behind that, you know, the Europe agreement, the real positive I get out of it was that the European leaders really said, hey, this is a problem, this is something we really have to deal with. But the details behind that agreement, I mean, these were the top-ranking folks, the details behind that agreement really weren't there. So it's tough to get really excited about, taking lots of risk going forward when the problems that we have, not only the solution isn't very clear that they've presented, but also the problems are actually pretty long-term.
Right, and I spent about a couple hours on the European Union website the other night, and frankly, if you take a look at their website, it's very indicative of why it's taking so long to come to a solution. But I want to talk about your portfolio because your perspective on what is happening in the markets is pretty holistic, right? You have pretty much everything in the portfolio. You can buy corporate bonds, you can buy municipal bonds, sovereign debt, and equities. Where are you seeing value in asset classes at the moment? 77% of the portfolio is in equities. Is that sort of a normal weighting for you?
It's pretty normal for us. We've been in the investment income builder, that portfolio in particular, we've been as low as 9% fixed income and cash, and therefore 91% equities, and as high in fixed income as almost 50, and so that'd be 50-50 split between fixed income and cash and equities. You know, right now, if you look at the problems out there, I'm not particularly bullish. I think the problems we're going to have to deal with, especially with regard to the news coming from Europe, is not necessarily going to be disastrous, but it's going to continue for a long time. But on the other side, you look at valuations, and valuations aren't particularly challenging for a number of risk assets. I was a little bit more excited about things maybe 3 weeks ago, and we've had quite a run. So you sort of have to reevaluate every day. But I'm still seeing lots of interesting opportunities, not in European sovereign debt, but in things that actually the market thinks perhaps are touched by that, when in fact I think the fundamentals look a little bit better.
Well, we actually have a little pie chart of the geographic allocation within the fund, the breakdown there. And not a lot in Eastern Europe, but you do have over 30% in Western Europe. So if it's not sovereign debt, where are the opportunities there at the moment?
Sure. So let me just sort of detail one particular large holding that would make up, that'd be part of that, which would be Total, which is a large French-based integrated oil company. If you look at that company, it does business all over the world. The vast majority of its revenues are in dollars. The vast majority of its costs are in dollars. It happens to be based in France, but frankly, its business is global. So to say, hey, look, this is a European company, and if it gets tarred by that brush, to a certain extent, for us as fundamental investors at Thornburg, really, that's what we're doing. We're looking at that and saying, great, that's an opportunity for us to get into that business, which in the context of this portfolio is particularly interesting given the income that particular security provides.
And this is a theme, I think, that's come up with a number of our guests, which is that this high level of correlation that we have seen sort of globally and across asset classes means that there's a lot of mispricings and things that probably shouldn't have been beaten up quite as badly. What else do you see around the world? You also have a pretty decent allocation to Asia at the moment. It looks like about a little bit under 15%.
That's right, and it's not just geographic, but also asset class, right? So we've been seeing interesting opportunities in high yield debt, as an example, or emerging market debt at the corporate level. Generally, I think corporations, both on the equity and debt side, are more interesting than governments, just because their balance sheets and their overall health is better. But yeah, the correlation issue is actually good for us as fundamental investors at Thornburg, because it gives us opportunities to exploit what we think is mispricing. And if we have a longer time horizon of investment, I know that's very cliche, but in this case, I think it's really quite important, then you can wait for your thesis to come true and to sort of to bear out. And whereas the rest of the market seems, especially lately, given all this volatility, to be looking very short term, to be driving with their eyes 2 feet in front of the bumper.
Are you getting a lot of calls at this point from investors? We've talked a little bit about outflows throughout the year, and certainly September was not a great month for stock funds. What are customers saying to you at the moment? Are they still concerned, or are they feeling like this is a great entry point?
I think in general, folks are pretty concerned still. We're lucky enough at Thornburg to have had significant inflows throughout this, which is a testament, I think, to our customers' time horizon. But I would say that folks have really been burned over the course of much of their investing lifetime. And most folks haven't been investing for 30, 40 years. They've really been investing, say, for 10, 20 years. And the last 10 have felt really pretty tough. In that regard, I see a lot of folks looking for income, folks that maybe are a little bit before retirement or what have you, or don't necessarily need it but are looking for that safety net. But certainly demographically, as people retire, they're definitely looking for the safety of income, the sort of certainty of it. And to that end, it's been pretty interesting to try to find that for folks in an environment where the Federal Reserve is putting cash at zero.
I was going to say, I know you're not a fan of U.S. Treasuries, and that's certainly been a hard place to find any income. Jason, we got to end it there. I wish we could keep going. I do appreciate you, though, joining us on this Friday. Thanks so much, Jason. Good to see you. That was Jason Brady of Thornburg Investment Management. Really fascinating portfolio. Has to oversee a lot of different decisions around the world and across asset classes.